I'm going to assist you with buying a home. So you're ready to purchase your first property, and that's great. You find a home that you like, but now what do you have to do? If you didn't get a pre-approval, even if you get a pre-approval, it doesn't necessarily mean you're guaranteed a mortgage. So I'm going to assist you a couple of ways so you can guarantee yourself that you can get the mortgage, and then you can look for a home and apply for it with confidence. Put your offer down and be confident that you can qualify for it. So to qualify for a mortgage, you need a couple things. The first thing you need is income. So you need to be working, or you need to apply with someone else as a guarantor that is working. And generally, rule of thumb, you can qualify for anywhere to 3 to 5 times your annual salary. We like to keep it around the 4 times range. So if you make $50,000 per year, you can easily qualify for a mortgage of $200,000. So if you're looking for a home of $500,000 and you only qualify for a mortgage of $250,000, you're going to need to partner up with someone, a spouse, a parent, a friend that's just going to co-sign the deal with you and go from there. So what income are they looking for also? You generally need, on average, 2 years NOAs. NOAs are your notice of assessment, your tax returns, and also sometimes they require your T1 generals, which is when you file your taxes. So you should have that in hand, shouldn't be an issue. Also, they require your pay stubs. So if you're working, they generally want to see that you're working at least 6 months in the company, so you may need an employment letter from your boss indicating that you're working there, or a pay stub within the last 3 months should be enough. So that's the first thing you need to look at. Second thing that's extremely important that people overlook is your credit rating. Now, what's a credit rating? FICO in the US and Canada ranges anywhere from 300 to 850. The popular ones in Canada is Equifax and TransUnion. I personally use Equifax, and I believe their rating is a little bit different. It's 280 to 850. Your credit rating just shows the bank that you are going to be able to make your mortgage payments based on your current condition, based on previous conditions. So if you file for bankruptcies within the last 5 years, generally they won't look at you unless you've shown that that was a one-time thing, so the broker can build your case to qualify you. And what you're looking at, you should speak with a mortgage broker or your banker to see what's the minimum credit rating you need. Generally, if you're looking at the range of 250 to 800, conservatively you would need at least 580 to 620 minimum credit rating. If you want to do it by yourself, you could go always on Equifax.ca, take out your credit rating. It's like $15-20, and you can see where you stand. And you could also speak with a mortgage broker, and they can advise how to fix your credit rating if you need to bring it up. So the higher your credit rating, also the lower risk you are to a bank, so the more likelier they will be to lend to you. So that's the second thing. And the third thing, to finish it off, that I believe is the most important, is your down payment. I can still spell. Okay, so down payment is extremely important. You should put down 20%, but honestly, how many of us have 20% to put down? Most, if a home is $500,000, that means you have to put $100,000 down. Not a lot of us have that saved. So if you put 20% down, you're less risk to a bank, the mortgage does not have to be insured, and it's easier to qualify. Anything less than 20%, the mortgage has to have insurance on it. Now, there's 3 major companies that offer insurance that will insure the mortgage if you put less than 20%. The largest ones is CMHC. They have the majority of the market. Now, it's important that you know their rules as well. You can speak with your banker or mortgage broker, because sometimes you can qualify through the bank, through the mortgage broker, but at the end, CMHC, which is a mortgage insurance company headed by the government, can still reject your application if they deem risk. Another one's to look at if you don't qualify for CMHC is Genworth Financial. They're the second biggest. And I believe the third is Canada Guarantee, which took over the ING portfolio when they collapsed in 2010 due to the market crunch. So that's something to look at. Make sure you qualify. And also, the more down payment you put, the larger of a home you can buy. Because keep in mind, you qualify for 3 to 5 times your annual salary. So the more down payment you put, the larger home you can find. So looking at this, if you want to qualify for a first-time home buyer, it's always good to go into a bank, go into a broker, see generally what you can qualify for so you can look at that price range. But it's good to know this even before you get a pre-approval and the rates and knowing what your payments are. Just make sure you're ready to qualify so you're not wasting your time and you're not wasting the broker's time or anyone like that. But this makes sense. Know this, know where your credit is. Make sure you make at least your minimum payments, and that'll protect you in being able to qualify for a home. So once again, in a nutshell, that is how you qualify for a mortgage so you can live in your own home. All the best. Take care. See you guys next time.
It's closer.